Today I took a free Schwab course on investing, and it's not as bad as you think. It's actually a pretty decent course. It takes about 3 hours. The courses are free for anyone that has Schwab, and compared to the investing courses that Fidelity had, the Charles Schwab one is much more advanced and it covers a lot of detail. Now, it's not as advanced as a college finance course on investing, but it covers a lot of the concepts. Schwab estimates that it takes around 3 hours, and I'd say that's about right because there's actually videos for each of these. There's actually short videos. Most of them are 3 or 4 minutes explaining different topics. Now, I took the fundamental investing course. It explains the 3 different styles of investing: value investing, growth investing, and income investing.
Fundamental analysis is the proceeds from its assets. You will have the shareholders' equity. Balance is achieved.
It actually explains how to read financial statements, and it does a pretty good job of sort of dumbing it down and making it easy to understand.
To consider. This statement shows how the company uses its cash to operate the business and make investments.
And at the end of each of these lessons, there's actually a quiz that you can take and get a score on. It explains valuation ratios such as price-earnings ratio, price to sales, and price to book. And it also explains how to calculate the intrinsic value for a stock, and it uses discounted cash flow. That's an advanced topic, and it actually covers this pretty well.
At its core,
the videos are actually very, very clear and easy to understand.
Fundamental analysis is about estimating the intrinsic value of an investment. An appraiser might start with the value of the land and the building. Then he accounts for all the equipment and assets that
It actually explains how to do discounted cash flow for a stock also.
Using a discounted cash flow or DCF model to calculate the intrinsic value of a stock, but it's nearly a 60% difference. The investors are likely to end up.
It also explains growth projections and how to value companies based on their growth. It also explains capital asset pricing model. This is actually something that's taught in finance courses in college. And it shows you the formula for calculating intrinsic value and the tools you can use on Schwab to do this. Now, I was trying to find out why someone would choose Charles Schwab over Fidelity as their main broker, and I think I found the reason. And it's not the lowest cost. For example, Fidelity doesn't receive any payment for order flow while Charles Schwab does. Now, Charles Schwab is a no-commission broker just like Fidelity and pretty much everyone else, and the fees are actually not that bad, but Fidelity has it beat because Fidelity doesn't receive payment for order flow. Charles Schwab receives payment for order flow, and that means that may not be a lot, but for 100 shares of stock, that's maybe 15 to 19 cents that they're getting paid from a third party to route the trades, but that likely means slightly worse trade execution than Fidelity. Schwab has a transfer out fee. If you're not happy with them, they actually Schwab actually charges you a fee to transfer to another broker where Fidelity does not. And although Schwab may not have many fees, Fidelity definitely has Schwab beat with their cash sweep account. So settled funds, dividend payments, etc. only receive 0.05% APY with Charles Schwab. That's pretty much nothing. On the other hand, with Fidelity, you get the Fidelity Government Money Market Fund, which pays a high 3.96% yield at the time of this video. That alone could be worth hundreds of dollars if you've got several $1,000s sitting there. Now, the thing that I think sets Schwab apart is the world-class education. And I'm not just talking about the courses they offer. When we go to the Learn section on Schwab, there's all sorts of information available. Under Insights and Education, if we click Stocks, for example, there's news articles, there's tutorials, and when you click on them, there's a lot of detail in here. One thing that Schwab has over Fidelity is that they have more retail branches across the US than Fidelity. For example, in my city, there's 3 Schwab locations and only 1 Fidelity location in my city. Now, Schwab has 24/7 support just like Fidelity does. Connect to trading specialists 24/7, phone, chat, or even in platform. However, I'm going to give the customer service edge to Fidelity because Fidelity also has a Reddit page where they have Fidelity customer service reps that answer questions there. But Schwab has excellent customer service also. Now, just like Schwab, Fidelity has learning tools available, but the tools are more basic. It's a little bit harder to use, and it's hard to find the stuff. They have a lot of information on sort of very basic info. Also, Fidelity has a YouTube channel with lots of information available, but I'm still going to give the edge to Schwab. Here's the Fidelity YouTube page. They have 125,000 subscribers and 367 videos. Okay, here's one of the videos.
Hey everyone, welcome to FidQ.
But the videos are rather short and the topics are very basic compared to what Schwab has. And when you look at the amount of content that they have, they're not updating it as much as what Schwab is doing. You won't find a whole lot of detailed trading information on Fidelity's YouTube page. You've got a lot of basic questions, financial planning, that sort of thing. Fidelity also has on-demand webinars just like Schwab has. They also have something called virtual classes. These are under the events section, and you have to sort of register for this. The interesting thing about this is it's broken down into multiple days. So each one of these days, I believe, is 1 hour from 10:30 to 11:30 a.m. And you can register or you can download the slides. Fidelity seems to use a lot of slides, and so they have a lot of questions. They have homework, and it's basically it's very old school. You can't actually answer the questions online. It's sort of like you have to circle stuff. For example, here's one of the homework assignments for the options course. And I guess you print this out. It's not in a PDF form. So I guess you have to print it out and circle it and then follow along the next day. Schwab is very much like Tasty Trade in that they have advanced trading strategies, advanced trading videos and content. Now, from what I found, most of the learning content on Fidelity is under news and research under Learn. And a lot of the content that Fidelity has in this learning section, it's sort of like articles only. Here's a trading strategy desk 4-week class on how to trade from Fidelity. And as you can see, they use a lot of slides. It's not as interactive as what Schwab has. For example, if we go back to Schwab, it's very prominently displayed under Learn at the very top. You'll find Learn and How To right at the top of the Charles Schwab menu. So it's very easy to find information on how to do different things. Schwab has not only a lot of information available on how to use their platform and how to do various things on their platform, like add an authorized user, brokerage checking, etc. But under the Learn option, there's multiple options. There's the courses. That's what I did. I did the course. But you've got more of these interactive courses. As you can see, the Schwab course is very interactive. It's very colorful. You don't need to print anything out. And they have questions at the end. You've got a video that explains.
With a little bit of interest and a lot of time.
And you can take a quiz. It has an interactive quiz that'll let you know if you've got the right answer or not. Besides courses, there's also Schwab coaching. On the Schwab coaching, you've got live webinars, and you can plan ahead for that. These are streamed on YouTube, so you'll see some of these will say live when they're live. Once they're done with the webcast, you can explore the recorded feeds. As you can see, this is much easier to navigate than Fidelity's Learning Center. For example, let's look at the trading growth and value stocks, and you can see all of these videos, 46 minutes long. This playlist right here has 82 videos.
Hello and welcome to Trading Growth. Selling
and you can see very technical information here.
We really want to kind of give us 439.04. Let me write that down just so we don't forget it.
And if we go to the YouTube page for Trader Talks Schwab Coaching Webcast, there's 156,000 subscribers, 2,600 videos. Here's the playlist here, Stock Investing for Beginners.
All right, well, welcome everyone. This is Scott. A green arrow here. So technically that's a new buy signal, right? Green particular case because my initial stop.
And there's also more videos on the Charles Schwab website. And as you can see, the information on the Charles Schwab is also more detailed than what Fidelity has. Fidelity's is rather basic. Okay, now for a side-by-side comparison between Schwab and Fidelity, the positions or portfolio section. Both of these I like really well. So the thing that I liked is this top row stays up there. It hangs up at the top of the screen. So you can scroll down and still see your positions. So you've got your positions here, price, percentage change, the value, day change, the total gain or loss cost. So I like Schwab so far. Okay, now for Fidelity. Fidelity also has a very nice interface. Just like Schwab, this row with all of the column details stays at the top. So I can keep scrolling. I can keep scrolling down and see all the details here. So you've got the name of the company, the price, you've got the daily percentage and dollar gains and losses, and you've got the total percentage gains or losses. This has kind of everything I want. This one also shows the cost basis just like Schwab, and it has a 52-week range, which is nice. I didn't see this with Schwab. Okay, now let's go to Schwab and look up a position. Let's look up Microsoft. You see the Schwab equity ratings, and you've got 1, 2, 3. You've got some Schwab reports here. You've got an equity rating. The analyst reports besides Schwab, you've got Morningstar, 1, 2, 3, 4, 5. You've got 5, 6, looks like 6 reports. You have a stock chart, news, dividend information. If you click show more, you see all the dividend information, earnings, historic earnings, price earnings ratio. I like this until I hit show more, and then it sort of reloads the whole page, which is a little bit annoying. Earnings per share, revenue. Now, the thing that I really like about Schwab is this peer and ratios comparison. I don't believe Fidelity has this. If we look here, we can see Microsoft compared to other similar software companies. And if we do show more, we can actually see the prices, how well each one has done. That's nice. And you've got some ratio stuff for each of these, how expensive each one of these is, how much debt they have, etc. You've got the analyst ratings for reports for each of these companies also. That's nice. You've got 1, 2, 3, 4, 5 years of financial data. 5 years of financial data with Schwab. Okay, so that's it for Schwab. Let's look at Fidelity now. Okay, now we're looking at Microsoft with Fidelity. You've got a equity score, you've got the price earnings ratio, some news. You can set up a recurring investment. You've got the chart. Okay, let's do the view all so we can see everything. Okay, you've got, shows if you have any positions with Microsoft, which I don't. You can see their percentage returns. You've got a profile, company profile. You've got some earnings information here. You've got a fundamental analysis report, whether it's undervalued or overvalued. You've got analyst ratings. And with the analyst ratings, we have the research reports on Fidelity. We've got 1, 2, 3, 4, 5, 6, 7. So we have 7 research reports with Fidelity. Schwab gave us 6, but we also have these 2 down here. So we've got 2 reports down here. So that's 9 total. So I think Fidelity probably wins on this one. They have more research reports. Also, you've got some key statistic information here. You've got industry average. So Fidelity gives us a software average rather than Schwab gave us the peer group comparison, which was more detailed. I don't see that with Fidelity. So we've got some ratios here and the industry comparison ratios. Here we have the competitors. So this is basically sort of the same thing that Schwab has. So it looks like they pretty much have the same sort of thing. Schwab was more detailed with the peer group. It actually broke this down much further for each of these companies. Okay, here's the financial statements for Fidelity. We have 1, 2, 3, 4, 5 years of financial statements, just like Schwab. So I say they're about the same. Here's something that we can do with Fidelity that we can't do with Schwab. We can do a recurring investment in a stock or ETF or mutual fund. With Schwab, you can only do this with a mutual fund. We can do stocks, ETFs, or mutual funds, and you can set up the frequency to invest, auto invest every week or every month, etc. Fidelity also has an advanced stock screener. You can search for stocks using different ratios, different valuation ratios, etc. We also have a stock screener with Schwab. It also is very advanced. We can search by using a variety of different ratios. So both Fidelity and Schwab, their stock screener seems to be about the same to me. Like Fidelity, Schwab has automatic investing where you can reinvest, but unfortunately with Schwab, all you can automatically invest in on a routine basis is mutual funds. There's no ETFs or stocks. So Fidelity wins there. Unfortunately, Schwab does have some downsides, and I think this is probably the largest downside. If we look at my account here, we do have this nice clean interface that Schwab gives us, which is really nice. Fidelity is also nice when it comes to the portfolio section, but if you look at my portfolio here, you can see it's rather small. Actually, I don't use this account very much, and it's mostly because of this reason. The downside that I'm talking about is Schwab's cash management or their sweep account or settlement account. As you remember, Fidelity has the Fidelity Government Money Market Fund. I think, in my opinion, it's one of the best sweep accounts or settlement accounts. It has a 7-day yield that's been roughly 4% for the last year or so. By the way, whenever I do one of these videos, I always get somebody in the comments that says 3.96%. It's 3.96% minus the fee. The fee is 0.42%. Unfortunately, they're not correct. This is the 7-day yield, what people are receiving right now after expenses. All you have to do is click here and read the information. This is the fund's total income net of expenses. Net, that means after expenses. So this is what you're receiving. It's not 3.96 minus the expense ratio. So don't make that mistake. Anyways, this is roughly 4%. Look at what Schwab is paying, 0.05%. That's a half of 1/10%. So the problem with that is any funds that are in this account as cash, dividends that aren't reinvested, funds that are settled after selling a stock or ETF, it's going to sit in this account and basically earn almost nothing. So what I've been doing is I've been buying. So what I do with brokers like Schwab or Tasty Trade, brokers that don't have much of a settlement account, is they buy a treasury ETF that pays a high yield. For example, I sometimes buy the Wisdom Tree Floating Rate Treasury Fund. This is a very short-term rate. It has a very high yield of 4.28%. Also, I'll sometimes buy SGov depending on the amount that I have. This one is roughly $100 a share. The other one is $50 roughly. The SGov yield is 4.22%. So that's way higher than the 0.05% that Schwab is paying. Okay, so you're probably thinking, oh, problem solved, right? Well, not exactly. So there's a problem with this. First of all, it takes a lot of work. Every time money goes in there or you sell a stock, you're going to be constantly buying and selling these ETFs. For example, this USFR, I have only $6 in cash in the account, and that's only earning the low. But I do have $50, and this $50.40 that I have in the Wisdom Tree Floating Rate ETF would have been earning only 0.05% and it would be sitting here in the cash settlement account. Unfortunately, if I want to buy another stock, I can't trigger Schwab to auto sell this. Let's say, for example, I wanted to buy Ford Motor Company stock, ticker symbol F. It's only $11 a share. If I go to buy Ford and I hit buy, one share, look what happens. This order cannot be placed. This order cannot be accepted because accounts with less than 2,000 equity can only place trades for the amount of cash in the account. Since I only have $6 in cash in the account, I can't buy this. So the solution to this would be to sell this share of Wisdom Tree Floating Rate. And so I'd basically have to sell this and then have the money sitting in the account making only 0.05%. Then I could buy the stock. And there's also the settlement. So I basically have to wait for this, basically have to sell the stock, wait for the funds to settle, then I could buy the stock. Or I could sign up for a margin account. The other option is to sign up with a margin account with Schwab. Unfortunately, if it's a small account with the count of less than 25,000, the margin rate is really high, 12.57%. So basically, if I bought a stock in Ford and I didn't sell the ETF first, I would be paying 12.57%. Then I'd have to sell the ETF, wait for the funds to clear. So as you can see, that's a very problematic and it's a lot of work. A much simpler solution is to just have a Fidelity brokerage account with the Fidelity Government Money Market Fund. Fidelity will automatically sell SPACs when you want to buy a stock. You don't have to mess with it, and you're earning a pretty high rate, almost 4% right now. So I definitely like Fidelity because of that. And you may say, oh, what difference does it make? Well, if you've got $5,000 that's sitting in the account for a year, $5,000 at 4%, that's $200 a year in interest that Fidelity would be paying you. The same thing with Schwab, only $25 that they would be paying you, so almost nothing. So definitely, I don't think Schwab is worth hundreds of dollars more per year. That's assuming you've got thousands of dollars sitting around. That's why I like Fidelity better, mostly because of the settlement account. Another thing, since Schwab is paying such a low amount, if you're trying to maximize your cash like I am, it probably means you're going to be making a lot of market orders. You're not going to be able to do limit orders with Schwab, and I'll explain. For example, if I sell this Wisdom Tree Floating Rate ETF, USFR, I'll have $50 in the account. Here's another thing. Schwab won't allow me to buy or sell this fractional shares. Schwab only lets you buy or sell fractional shares in S&P 500 companies. So ETFs and companies outside of the S&P 500, you can't buy or sell fractional shares. So for example, if I wanted to buy a fractional share to cover this, not possible with Schwab. I would have to sell this whole thing with Schwab, and then the money's going to sit in the account. And then I would be more likely to do a market order for the stock, because if the money is just sitting in the account in cash, then if you're doing a limit order, it could possibly be weeks before the order is executed. So with Schwab, you're more than likely going to be doing market orders. That limits a lot of the options that are available with Schwab. Let's not forget Schwab coaching in-person events. It's right here on the right. In 2024, Schwab had 19 in-person events across the country with over 8,300 clients participating. Here's the lineup for 2025. There's one in Dallas, Chicago, and Anaheim. Here's a list of the events that they're running. Let's just click on this one here, Dallas, Texas in September. Okay, Market Drive, Dallas. This is a one-day in-person educational event. Explore new innovations, talk strategies with fellow traders, and more. And it's all free. Here's the agenda. Registration and complimentary breakfast, 8 a.m. And this goes all day long. So they're hosting this event all day long. A light breakfast will be provided complimentary, welcome message and morning sessions. Grab a complimentary lunch, then there's more sessions. Network reception, complimentary appetizers, cocktails, and other refreshments. So I think really what sets Charles Schwab apart is having all of this educational information and events like this that are all free. Pretty amazing, by the way. So I think when you factor in all the stuff that Schwab is giving you free, the educational stuff, you're not going to feel as bad about not having a good cash management account or the payment for order flow or the features that Schwab lacks that Fidelity has. I think that's really where Schwab sets itself apart from Fidelity. Now, right now, I didn't see any good promotions for Schwab. I did find this Schwab starter kit bonus. You get $50 of Schwab stock slices. All you have to do is become a Schwab client, fund your account with at least $50, and you'll get $50 back from Schwab. Now, this is not the best deal. It's been higher in the past, but I do have some better deals. If you want a more generous bonus, I'll put a link to my Moo deal where you can get 8.1% on uninvested cash, and you can get some free stocks depending on the amount deposited. And if you want a larger bonus, I have a Tasty Trade referral deal where you can get roughly 2%. Now, I did this one in the past and I've done videos on this, but you could do smaller amounts, but it's roughly 2% deposited or transferred funds, and you have to keep the funds there for 12 months. I'll put a referral link down below. So thanks for watching. Be sure to like and subscribe if you haven't already. And also feel free to comment below. What do you think the best reason for using Schwab is?